and welcome to another edition of BCR Webcasting. I'm very happy to be joined today by Louis Carbonnier. Louis, welcome.
Thank
Louis
you.
is co-founder and co-CEO of Hokodo and Liquidity Lab. And Louis will be speaking at our Receivables Finance International conference, which will take place at the Hilton in Berlin on the 5th and 6th of May. And the particular panel that Louis is going to be part of is going to be talking about AI's real-world impact on receivables and payables finance, receivables, payables, and working capital finance. Louis.
Hi, Michael. Hi. Thanks a lot for having me today.
You're welcome. And AI is a hot topic everywhere at the moment, of course. And I guess what people are very unsure about, I certainly am, is where this is all heading and what we might be seeing in even 2 or 3 years' time.
Or even in 2 or 3 months.
Or even in 2 or 3 months. Everything seems to be changing very rapidly. And in terms of the sector we're in, receivables and payables finance, AI is often said to be or expected to be helping in terms of underwriting. But where is it actually changing outcomes? It's not just speeding up decision making, is it?
So it's interesting that you start with underwriting, because risk is really at the core of any lending business. So the short answer is yes, AI has an impact and will continue to have an impact on underwriting, and I'm going to develop this a bit more, but also across all the different building blocks of lending, including the back office, the operations, but any function really is going to be impacted by AI over the coming decade. And we're only in year 2 if you think of when ChatGPT released its first generative LLM. So it's very early days. As you said, it changes super quickly, so it forces us to remain very agile there, and not also the crystal ball gazing exercise becomes very, very tricky. 6 months ago, our CTO was very skeptical that AI would ever be able to produce decent code at scale. And it turns out that with the latest versions of Claude, we now have junior developers able to produce proper code, and even now senior developers are wondering whether their job will still be there in a few years' time. So this is really, really amazing, and I'm talking about something that literally have happened over the past 6 months. Now, going back to specifically the question of underwriting, there's already quite a lot that can be done with the AI that's not necessarily generative AI. So with good old machine learning, that has a deep impact on underwriting, I'd say on 2 different levels. Number 1, it makes the credit models, the fraud models, much better. And that is simply through being able to ingest more data, more transaction data, not just the financial statements data that we used to rely on for underwriting. And more data in general means a better decision. So that's something that has been around for some time already. I'd say over the past 10 years, we've all been playing with this. Yeah. There's just a second level, which is also in terms of accessibility, because we're able to, produce more credit decisions at scale. It means that we can serve the long tail of SMEs better, and companies that did not have access to lending because it was not economical to do so now have access. So there is impact on underwriting in terms of speed and in terms of accessibility.
But does it still work when you have fragmented data coming in and inconsistent data, particularly from SMEs, for example? How do you build reliable models in that kind of imperfect environment?
That's a fair question, and I'd say that's the whole challenge is there, because you can have the best AI model. If you feed it the wrong data, it's going to give you the wrong decision. It's literally the good old garbage in, garbage out, and that was true in the old world, and it's going to be true in the new world, no matter what. When I look at what our data science team does, it's not going to be very glamorous to say it. However, 80% of the time is spent cleaning data, mining data, and it's only the last 20% where you do the funky stuff that data scientists want to do, of unleashing AI to squeeze the predictive power out of the data. But 80% of the time, it's actually making sure that we're integrating into the right sources of data, that it's not breaking, compiling, concatenating, cleaning. And of course, over time, you build some data ingestion pipelines and routines that do this more efficiently. But it's been a kind of invariant over the past 20 years that more than 80% of the time is spent on the data layer.
Okay, so maybe a lot of people don't realize that. So the sort of filtering, cleaning aspect is key.
Still true in the new world.
Yeah. And how do you think the clients and customers are going to be looking at this? I mean, a lot of people don't entirely trust AI-driven outcomes, especially when it comes to credit limits or declining coverage. How do you think they're going to take to it?
And I think we shouldn't trust it blindly. It's very important, especially for us as financial services providers, to remain in the driver's seat there. So when we look at embedding AI into our operations, I'd say the governance layer is incredibly important, and even more so because we've seen all the issues with security breaches that one can face, data leakage. Those have massive reputational impacts. Then hallucinations as well can happen. So having a lot of breaking circuits, human in the loop circuits that allow the financial services provider to make sure that there are guardrails around the AI. It should be treated like a very junior collaborator, but the responsibility at the end of the day sits with the bank, the factor, the insurance company, and designing a system where there is backtesting, evaluation, guardrails, human in the loop is extremely important. And then to your and that the burden here is on us as financial institutions, not on the end customer. If we do this well, I do believe that there can be an impact that's positive both for the providers and the end consumer. So for the client at the other end, there's going to be more accessibility because there's this long tail of the market that's not being served because they're not attractive to a banker or to a broker to structure a solution for them and then to service them. So this long tail of the market will get offers in the future. What we've observed when at Hokodo offering receivables finance to those tiny SMEs, sometimes even sole traders, is that with AI at scale, we could offer an 80% acceptance rate to that market. And it makes sense at the end of the day because there will be 1 or 2% of defaults in that segment, but a lot of them are good companies that pay their bills and do deserve access to financing. So will they trust the decision? The answer is 80% offer rate is better than the low single digits than we have today. So it grows the market in general, and it's positive for everyone. Then even though it was all fairly automated, etc., there were still different workflows to be able to appeal a decision, just like in the good old days where there was a credit decision that came from the credit insurance company, for instance, and there was an appeals process that could allow for a higher credit limit by providing extra information, putting a different human in the loop, and that can still exist in the new world.
So basically, as use of this grows, confidence will grow with it, and
Yeah,
people become accustomed.
and I think the outcomes will be good. More people will get access to better decisions. And for financial services providers, it's going to mean also providing more timely decisions. And instead of making them over 2 or 3 days, making them instantly, which also allows to unlock things like e-commerce, where people can't wait for a decision for 2 days when they're making a purchase, or unlocking access to the smaller end of the market.
Are there any areas which are still being sort of undervalued or underestimated in terms of where AI can make significant changes and add significant value, looking ahead, in the next few years?
So where could AI add value? This is another big question, Michael.
I mean, more than that, than that has been considered so far. Obviously, we've
Yes.
talked about underwriting and risk, but
Yeah.
but are there other areas, do you think, where?
Yes, I think in general, the finance area and the CFO area has been the poor cousin of the past 20 years, because a lot of the technological advance around mobile, etc., has been front end and has been more favoring the rest of the business. And when you look at the CFO department in general, it still relies a lot on Excel files and stuff like that. But because it's pretty, it's numbers driven, deterministic, these are things that are now being automated. I give you a very concrete example. What we've been able to do at scale is all the using AI for invoice reconciliation and cash application, which is something that is traditionally very time consuming and boring, or also for dunning and collections. And that started with just sending emails, text messages, but now with the voice agents, we've been able to also automate collections, which was something that was extremely time consuming, and we had a whole collections department. And being able to refocus our agents on the bigger files and have AI deal with all the small debts where, frankly, we were giving up and thinking, this is not worth the time of a collections officer. This is now a good example of how AI can change the back office of the finance area.
Yeah, increase efficiency, lower costs, and
Yep.
it seems to me, and probably everybody in the world today, that AI is going to make dramatic changes to the way we live, but that includes working capital finance. So it's really going to be an amazing time ahead, I think. Louis, thanks very much for your time today, and
Thank you, Michael.
we will certainly look forward to hearing more about this and from your fellow panelists at Receivables Finance International. And just to remind everybody, that will be in Berlin at the Hilton Hotel on the 5th and 6th of May. And do come along and hear Louis and the other panelists and the other panels. It'll be a really exciting event. Have a look at our website at www.bcrpub.com/events for more information. Louis, thanks again, and look forward to seeing you in Berlin.
Thank you very much, Michael. Looking forward to RFIX.